Hey guys, this is Julie. We're going to look at a few charts, and this is the SPX. Might as well talk about my favorite subject, the JHEQX, while we're looking at this chart. What we've got here is a pullback. Finally, have been waiting for it for a long time, and no better time than the current. We broke the weekly and monthly ones. So that means the dealer has been moving risk down. When we look at the monthly chart, we'll see that the monthly level also was broken, both of them. So I can calculate both 30 days and the number of trade days in the month. So that's why there's a discrepancy between the two. So you've got two levels at a minimum if you're just calculating on the open. We can calculate open and close, but instead of having four lines on the chart, I thought I would just show you the opens. The quarterly also, you can see that we are now inside the quarterly one. So we're still inside the one and coming down to the quarterly one at 50.76. So might get a little bit of resistance here, um, but definitely keep your eye when we get to the weekly levels. That 50.76 coincides with the 50.66. We're a long way away from June. So the quarterly levels are kind of weakish at the moment. So there could be a pop and drop. You know what I'm saying? Pop and drop, drop and pop, drop and pop. So break this quarterly one, flush down to this long put, which is the JQEX, EHX. And also that is 5% of the current high right above it. So this 49.75 to 5,001 really is my target for this leg down. If I can spit it out. So 5% from 52.64 brings you down here to this 5,001, the red line. And then we have that long put right there. As far as timing wise, you can see that this is the 7-day and weekly distribution. Price flushed down to the weekly 3 right there. This lower, so let's go back to that weekly 3 right there. And let's show the lower fibs. I don't want to see the upper ones. I just want to see the lower ones. Let me just zero this out. And see if that can get us down here this week. Yes, it does. Look at that. So the tail 2 for my tail represents one time that 0.50 measures from the mean to the 3, right? So if you measure from the mean to the 3 and then double it, that's 2 times the range, you're going to get down to this 5,001, the 5%. So I think that's a real strong possibility. Um, if there is any downside move going into OPEX next week, um, it definitely looks like it could be hit at that one time the extra weekly range. To look at the monthly contract to see if there's anything that's going to block it, there is a monthly one at 50.66, right? So there's going to be a little bit of bounce consolidation because that is controlling the one. So dealer would have to move risk out below the one, and that's at here our weekly 3. So that weekly 3 has a monthly 1 on it, making it a real strong level right around this 50.50, 50.66. So between 50.50 and 50.66. But, you know, being so low and close to that 5%, you know those algos are going to be running for it. especially with this long put sitting there. So, what all this means in the short term is, you know, you're going to expect to see 49.75 defended. So, if that breaks that 49.75, what that will do if this breaks right here at this 90-day one, right there, 90-day one at 49.75, if that breaks, we, are going to be coming down quickly. So the 48.62 and then the 45.01 and then down here to this short put, which interestingly, their short put is on top of the 90-day three. That's the wrong position to be in. They're backwards on this. So I would expect that this month, quarterly three, the difference between the 90-day three and the quarterly three, between 45.66 and 4100. So this definitely is the buy zone. And if you are a long, long in the market, which most markets are, um, in the equity index complex, you're going to be looking to see that dip buying coming in right there if we get down there. So this 49.75 long put is going to be defended. If it breaks, the dealer is going to be going with the trades. They're going to be going short puts, or long puts, or excuse me, short puts, long calls, right? So expect that shift to occur, and the dealer is going to be positioned going short. So once they're below their long put, they're going to be relying on this short call to sort of offset the trade. And so they're not really going to be losing anything in the fund until probably, I'd be thinking they'd be looking at that 4,500 pretty hard. So this would be the bounce if it did slip. And that's with the current volatility, guys. These volatility markers change. Okay. And, volatility is dynamic. The distribution for the 90-day can shift. And maybe JP Morgan's quants know that and will tell me, after the shift, you'll see that we're actually below it. They could probably do that. So I just pointing out they're on the wrong side at the moment. So 49.75 long put, this 48.59 is a monthly three. So that's going to get a bid. Put a little green marker on him. Arrow up. And then, they're not going to get there all in one fell swoop. So where are the weekly levels, right? How far do we expect them to go? You can put the Jats PT indicator back on the chart and use the oscillator this time instead of the chart. So the PT2 is the oscillator, PT3 is the chart. And what we want to do is not a 240 minute, we want to do a weekly. And as simple as that, your levels will come on the chart. Let me pull this up. I'm running a distribution behind the chart, the daily, to use a 7-day distribution, and I'm putting the distribution from the 7-day one on the daily chart on top of the 240-minute chart. Very cool. NinjaTrader is absolutely the best platform. I'm sorry, guys, you just can't do any of this stuff with the other platforms. So 105.67 is the high, the 95% of the range. So after you get to that 100 point in the week, be looking to see if the algos start kicking in, right? To automatically knee jerk it up at that place, or see how far you are from one of these levels. I would imagine this um, zone 5,000 to 5066. Is that right? Yep. Is going to be bid. And then as well as this 49.75 if that breaks. So really 49.75 to 50.66. Any of this can be a bounce box. So if you like positioning with options, you could come in here and look to put some spreads on. So maybe do a put spread, the 49.75, or maybe this Fibonacci just below it, 49.47, 48.94, put spread, and then ride that bounce back up, because bear markets don't just go completely straight down, right? They're going to find a buy zone. And so that would be a trade plan. So you can come over to Quick Strike, and we'll just put one on real quick doing that. See what it would be like. And when I want to use the end of the month contract. So come over here to the spread builder. Go to the end of the month. Options. And what levels do we want? 49.50 and 48.90. So here's 49.50. Put a short put on it. And this 48.90. I'm going to put a long put. So there's my short put spread. So that's $411 premium collected. So can we improve on this by selling a call to get more premium? So where do you think that bounce would come in? Well, they're going to be selling the ones, right? So 52.50. Let's add a call to it. 52.50. And then change that call to a short call. Like that. Okay, now we're talking. 29.62. So you see how much I was able to get the premium up by adding the short call above it. So a put spread with a short call, 29.62. So that's you multiply that by 100, right? Yep. 2,962. So that's a lot better. So that's for one contract. So let's take a look at it. Okay, so I have my spread, and the margin required to put the trade on, $12,396. And the premium earned is 29.61. So 12,000. What did we say? 396. So 12.4. So say you were doing this in a 50,000 account at 12,400. So you could get four contracts. And the risk, or 29 um, 60 um, times 4 would be 11,480, 840, sorry. So about, 11,840 premium collected um, till the end of the month, just, a couple of weeks. Yep, April 30th. So that is a hypothetical, spread potential. And I just think that would be. And then if you're going to be doing, micros, just trading futures, a lot of traders just trade futures. You certainly want to be looking to establish a micro position at these levels, um, and keeping in mind that you are, if it comes next week, you're beyond one time the distribution at 5,000. So you're definitely long in the tooth at 5,000, which is also the 5% mark. So anywhere between 5,000 and 49.75, yeah, that's going to be real hot right in there. Yep. All right, guys. And then, of course, have fun trading down to it. You know, can't have any pudding without the reward. Gotta be able to be paid to get down there and then bounce it back. Of course, like I said, if it gets back up to these levels, 50.76, they've already moved the risk out. They're not going to let it back in the distribution. So you're going to be looking to again, close your trade around 50.76, or and wait, maybe trade it back down. Yep, something like that. All right, let's take a look at the VIX real quick. Last week, Friday, a couple of days ago, we topped out at my tails, and I knew that we were coming into these areas and it was going to be the end of the line because you had that big long tail and the short tail. So I had three tails right there. And it went up and tagged my top tail on the tick. I don't know if you can see this. And a little above. And then turned around. And then came back all the way back in. And that was, showing that strength that came in at the support level on Friday. So for the ES, we were looking at the ES. Um, Speaking of which, we can take a look at that. I do want to put the VIX into view on the quarterly and monthly and weekly before we go. Don't have enough data for VIX quarterly. You have to be able to get a lot of historical data to be able to manage these. distributions. Okay, so the VIX went right to 1924, which is the monthly three, the 1 month three right there off the open, 1921. So algos are working, going right into our levels as they often do. And so if we get a further push, I'd be looking for 2059, 2139 on that monthly chart. And I wish I could get some quarterly levels. Yeah, I just can't get it. I'm not getting enough data streamed. And then let's look at the weekly real quick for VIX. Okay, looks like the last week's level ended at 2014. We didn't get up there. We got, tagged on that monthly level right there at 19, um, and turned back around at the close. Ball crushers came in to support that ES monthly level, which we'll take a look at now. So next week for VIX, I mean, be prepared for 2021 next week. All right, put this on. Change this to SP or ES real quick. Okay, here is where ES came down, tagged that 51.52 and bounced. Went up to the weekly two, and then went back to the sort of the middle of the weekly two and weekly three. Or I'm sorry, um, this is the weekly, and then this would be the 7 day. Do I have that backwards? No, yeah, that one's the weekly, the bottom one. The top one was the 7 day up here, which acted as resistance. Oh, I'm sorry, weekly close. I have so many things on the chart, I never know which one is one. That is the weekly close. Yeah, it's dashed. Sorry. I have a 7 day on here also. Where is that? It's the one that's below it, 51.47. It was not tagged. They stopped it at the weekly one. Okay. So be prepared for some more downside next week, going in tandem with that SPX moving down to the 5% and the JHEQX put, long put. Long put means bounce. So that's it for next week. I hope this helps. These are the Jats levels. You can get them for Ninja Trader's platform. And we have training classes on Wednesday. Been showing some methodology of using the Jats oscillator to just take um, directional trades with the trend and showing how that works out. Um, Double the risk, but you hit so many winners and few losers that if you do get a stop out, it's not going to wipe the account out because you have so many winners for this methodology. All right, guys, we'll talk at you soon. Thank you so much.